Hey everybody, I want to talk a little bit about Fibonacci and Fibonacci retracement. We've had a lot of discussions in the Bullish Bears swing trade chat room about this tool, and I just want to talk a little bit about some of the trouble I had when I was trying to learn about Fibonacci. I was going to I went to some pretty good places, Investopedia, StockCharts.com. You know, I, I was finding a lot of inconsistent data, or I would find someone telling me how I had to use it a specific way, and if I wasn't doing it that way, it was wrong. And some would tell me, don't use the wicks. Others would say, yeah, do use the wicks. Some would say you couldn't use it on small time frames. Some would say it was okay. Some wanted you to start always at the bottom and move up. Some wanted you to start at the top and always move down. Just so much inconsistency, and uh, I just I gave up on all of that. And so I kept some of the information that seemed really valuable and that I was able to test. And that's what I did. I started testing everything. And so what I ended up doing was proving to myself that I was using it in a way that I found valuable. That's kind of the key, right? It, I can apply it to charts in different time frames and on, any kind of instrument, and I can get value out of it consistently. There isn't much more that I could ascribe to this other than that one thing, that every time I use it exactly the same way as I did last time. The rules that I apply to it are the rules that I always apply, and I stick to them, and I don't change that. And it offers me really, really valuable insight on what the market is doing or what it potentially could do. And so I want to kind of go through a few things that I do. And I'm not telling you that this is the only way that you can do it or this is how you have to do it. Just want to share with you the struggles that I've gone through and kind of point out what I am doing with Fibonacci that works really well for me. So, one thing I want to point out, if you are using your Fibonacci and it has an extension at the top of it. So, for an example, right here, the Fibonacci is from 0 to 100, but you can see that there are more lines up here. It's got an extension at the top of it. If I had drawn this line from the bottom to the top, from here up to here, well, those lines would be down here. It would give me an extension below the market. Well, I don't have any value in having an extension down there, right? So I wouldn't want to draw the Fibonacci if I'm bullish in the market from the bottom to the top because I don't need this extension. All right, so that answers one question for me. Do I start at the bottom and draw up, or do I start at the top and draw down? It depends on where I want my extension. Since I'm still looking for price to go up, I would draw from the top down so that 100 would be at the top and the extension would be up here so that I perhaps could recognize where price might go next, right? We would anticipate a move up to the 1236. So that covers that. The next thing I want to talk about is how to identify if you're using the extensions correctly. So what I did is I tried this on multiple charts on multiple time frames, and what I looked for price to do was make a move up into the 1236 and stall there. So I asked myself, I had heard a lot of places tell me, "Oh, you got to go from the very top down to the very bottom." Well, I mean, the very bottom's like way over here. And I don't see the value of that. I don't. I could do it, but I don't see the value there. Does it line up? Yeah, I mean, it really does. Look, price got hung up at the 23.6. It It found some resistance around the 38.2. Here again at the 50, the 61.8. Look, really strong magnetism at the 78.6. So does that work? Yeah. Yeah, I mean, it does. I don't think that that's the only way that we can do it. I don't think that we have to go to the very bottom of the chart here. This is kind of where I'm trying to go, right? This is the consolidated area. This is where price would be breaking out from. Does this work? Well, price came up to the 236, right? We had the interaction here at the 38. We had a real strong reaction here at the 618, and again, price magnetized at the 78.6. So, you know, that works too. And so I don't have to sit here worried, oh man, what if I really need to be down at the bottom here? It doesn't matter. You know, do I need the wick? Do I not need the wick? You know, should I just get the body? All right, should I be down here? Don't stress it, guys. Don't stress it. Make sure you can recognize areas where price is likely to stall or run into resistance or maybe find some support, right? So there's value in this, whether I was here or here or here. Okay, and I can use it in different time frames. We don't get to look back on the day when we're in the middle of our trading day, right? So if we were sitting here and I'm in this range bound market and I'm thinking, man, you know, I'm looking for a breakout here. What would be my next leg up, right? From the bottom of the breakout. So maybe we want to go down to the bottom right now. And I've got my market channel here. From the bottom, and maybe we'll just turn that line on. I normally leave it turned off, but that's all right. We'll turn it on. So now we've got the bottom of our channel, the top of our channel. We've got price range bound. I'm waiting for a breakout, get a good bounce on the moving averages, and I'm thinking, you know what, this is it. I'm taking it for a run. Where could I anticipate that price might stall? Well, at the 1236. It sure did, right? When it got there, maybe I don't want to take profits yet, right? Maybe I want to add to my position because it broke above the 200-day or the 200 moving average at that point. But I could grab the Fibonacci and just stretch it on up there. And now I still got a projection, right? I got the next leg up where it could stall. It doesn't have to go up there, by the way. We know it could turn around on me. It absolutely could. But the Fibonacci is giving me a representation of where I could anticipate a price stall. And it did. It stalled there. All right, so don't be afraid to use this in a dynamic fashion. Grab that sucker, move it around in the middle of your trading day, throw it onto price action, and anticipate where price could go next and get hung up. That's the value of this thing. And I wanted to share that with people because there's been a lot of debate about it in the chat room and a lot of talk. And people don't even know why this thing works, right? They just know it does. There's not a scientist out there that could explain why this thing works. So don't let someone tell you how you have to use it, right? What the only way is the right way, and you know you're doing it wrong. No, guys, don't listen to that. Okay, find value in what you do and do it consistently so that you're always using it the same way. And then, you know, I think you'll get a lot more value out of that. Now, I want to talk about pullbacks and retracements. All right, so when it comes to measuring pullbacks, what I'm looking for on an intraday, or you know, whenever I see a pullback, is I want to know, has that pullback broken a trend? Right? So typically, what I identify a pullback to a 50, I'm looking to see if the trend is broken. If in this example we have a downtrend, I'm asking, is this pullback right here showing that the downward trend is broken? Well, you can see it broke the 50 and it closed above the 50. So the trend was stalled. but it did not continue on, right? So when I see this, I have to ask myself, am I measuring something that's too short, right? Because I mean, if we measured something that was, say, right here, when in this first green candle, if I started to see that, and that's as far as price got, and I throw up my Fibonacci, and oh man, I got to measure this. From the bottom of that wick, it moved back up and almost touched the 618. This is such a small area. I don't have enough information here to measure, right? And so I could see a break above the 50 and it just get things all jacked up. And when I got to this point, and now I'm looking at this break above the 50, I got to ask, do I have enough information here? Or am I just faking myself out, right? Am I zoomed in too tight? This is a 1 minute chart. These are 1 minute candles. I've got 6 minutes of data here. Now I've got 10 minutes of data total right here. And I'm asking, am I measuring in too small of a spot? Yeah, I think we are. Because typically a break above the 50 is a signal that the trend is broken and that price is stalled. Well, that obviously didn't happen next, right? So that tells me that, hey, I don't want to measure something that small. There's not enough information for the Fibonacci. Maybe you would want to go to a tick chart, right? And find more data in that 10 minutes that you could measure with the Fibonacci. But this is showing you very clearly that price didn't stall here, right? The trend wasn't broken. This thing continued moving down. And that means that this measurement was wrong. I didn't have enough data and I couldn't trust it, right? But now, if I take it down to the next leg, we had a retracement here. Is this enough data? Well, it's starting to line up a little better. We got a retracement to the 786. That we see that quite a bit in a big measurement, right? So this is a small measurement, probably a good 13, 14 minutes, but yet look, it was enough data to identify a pullback to the 786. So we're just getting into that range where we actually have enough data to measure. So I'm not going to tell you that you can't measure something as small as this, but I am going to look at it really close and ask yourself, do I have enough data here in these 4 candles to identify what could happen next? I don't think we do, right? But I started to find it at this pullback. And if I take it down to the next level, I know for sure now we've got enough data because we found it here. So now I get a pullback to the 786, price stalls. I'm really comfortable with the idea that, hey, we're heading lower and I've got a target. I can identify where I think price is going to stall next. Sure enough, it breaks through the previous low, sets a new low, heads down and stalls at the 1236. So I got value in that. I knew the trend wasn't broken. If we measure it down at that new spot, now there's our 100. Price came up. It didn't even get close to the 786. That told me that not only is the trend still intact, it's still aggressive, right? It turned right around and just kept on dumping. But I still had a target where price might stall. And it not only stalled there, it reversed at that point. When we started to see those reversals, we could move that candle or that Fibonacci down to the candle here and recognize, hey, that pullback came to the 786. It actually broke it, right? It tested and failed. It tested again, failed with a rejection on the 34. And in a downward trending market like this is a trend day. In a trend day with a pullback to the 34, that's a signal to go short. That's a touch and reject, right? So great confirmation of using the fib and actually putting it to good use in an actionable material. And then we really had a breakdown from there, right? We had our breakdown to the next leg. Never seen a pullback even get close, and it just continued to move down to this point. Here, we had a stall again to the 34. That again is a signal to go short, and it's a touch reject signal. Would have took it short there in anticipation of a nice trade. It made it back down to the 1, but we stalled out there, right? We at least made enough to probably cover our commissions, but we ain't got nowhere to go now, right? Price reversed. So now we've got some price action that is showing us something different. Now, what I like to do when I start finding stocks that are range bound like this, I use the Fibonacci for my next drawing tool, the channel. So I'll go in here, and you can use whatever colors you want. You don't have to use these. I think you'll find a lot of value in this. Instead of erasing what you've already got, use what you have to your advantage. It's already on the chart. I've got a very strong channel right there, and I can monitor price. At some point here, I had a breakout above my channel, false breakout. It's one of the reasons why we don't try to trade a channel breakout from the top. Is it's likely just to reverse on you and stop you out. We want to trade a channel. If we're looking for a topside breakout, we want to trade it from the bottom of the channel up. All right, just like when we're looking for a bottom side breakout, we would trade it from the top of the channel down. That way we at least get this much profit. And then if it reverses and hits our stop, well, it hits our stop inside the channel here after we've already made a pretty good amount that could at least pay our commissions, so that when we're getting stopped out, we're taking almost no loss here. All right, so we had our fake out, and we're back again in this range bound market. I can still leave the Fibonacci on because, you know, we haven't gone anywhere. We could take it down now to its lowest point on the chart, and we can see now with this new low, we're flirting quite a bit with that 618, but the market still has not gave us a new trend, right? So the downtrend has been broken. The confirmation of the break came here with a break through the 50. So we're no longer in a downtrending market. Now we're in a range-bound market. Still no reason to take my fib off because I'm using that for a channel. We could throw a line up here to recognize the high, and we would just project that to the right. And what we would be looking for is price to break above that to recognize that perhaps the downtrend is done for the day, right? So through this sideways trending market, we would have already decided we weren't in a downtrend anymore. Now, it could begin again, right? We could have this consolidation, and then price could absolutely break through the bottom here and continue to go lower, but that's not what happened. When it came up here and it broke above this price level, we would go ahead and abandon the Fibonacci that we had earlier, because we're no longer needing to measure a downward market. Now we need to measure an upward market, and we can start all over again. If we only had this much data, is it enough to recognize price action? Maybe, right? Because I don't know. We had a pullback here to the 618. Was that because we're measuring a very small amount of candles? Or is it because we actually had that strong of a retracement? We'd have to measure something later on that small and see if it works for us. But what we do know is we had a really good bounce on the 34. Price broke above the high here and took a run. When it finally closed above this 200 moving average and we take our Fibonacci and throw it up there, we're looking for a retracement now from here down before moving up higher. Well, we didn't get much of a retracement, right? It ran sideways here for a moment and broke up to the next level. But look where it stalled. It broke above the 1236 and then it magnetized there for a little bit. Maybe we're drawing our fib in the wrong spot, right? Maybe we don't want to use the wicks. We can drag it around a little bit and see if we can find something that matches our measurement a little better. And you can see that as I'm moving it, I'm not getting any value out of that, right? But you can see that it's giving me an opportunity to test my logic, test to see if I'm using this correctly, if I have enough time on my measurement. It looks like I do. We know that we measured previously with 15 candles. What about if I take it all the way over here to the low? Does that give me any more value in my measurement? It does. Yeah, look, I get the 1236, price stalled, moved up to the 150, price stalled. So it obviously is good enough now. So when we got that next move up and price stalled, I got the opportunity there to take my Fibonacci and move it up to the next level. And I would be asking the question, where is price likely to stall next? Well, I can move this around. I don't have to stay range bound here. I could move it up to the last place that we had a retracement, right here, before a retracement. Is this a big enough move to measure? Yeah. Price came down into the 786, moved up to the 123. If we were only right here with price, we hadn't seen any of this yet, we could have a target profit zone of 123. Price reached that and it stalled there. All right. So don't let someone tell you how you have to use this thing. Let it be dynamic. Find ways to test your theory to see if what you're doing is valuable to you. Can you find information in that you can use for trading? Now, I do want to talk about when price breaks through a moving a line here from above down through the lines. If I've got a full chart full of information and I see price break through from above and close between the 618 and the 5, I'm very concerned that my upward trend is broken. At that point, I would be very critical of the market and I would be anticipating a broken trend. If it pierces the 50 but closes above it, I would almost consider that market stalled, no longer in an uptrend, right? And I would be anticipating a range-bound market at that point. If it breaks through the 50 and closes below the 50 from above, to me, the uptrend is broken. And we are now in either a stalled market or in a downtrend. That's how I use it. I don't confirm it just, from the close of below the 50. I don't just automatically give it the call out. All right, we're in a downtrend. No, but I will call out that, hey, the uptrend is broken. It's done. We're on a timeout for a minute. We need to watch price action and figure out what's going on next. Are we going to stay range bound inside a channel? Is the upward trend broken and we're headed to the downside? We need to not take any long positions at that point and wait to let price discovery work itself out. All right? And that's how I use this. That's not how you have to use this. I just want to share with you what I've learned from using it and how I use it in my trading. So I hope you got some value out of this video. I appreciate you watching it. I look forward to seeing you at the next video.